Everyone, my name is Ricky and welcome to Peaceful Investor. When it comes to investing, I believe in one thing: follow the value, not the crowd. And today we are going to talk about the most hated four-letter word: coal. Yes, people, call it dirty and harmful for the environment, but here is the twist: not all coal is the same. Met coal is the key ingredient for making steel, and the steel is the backbone of infrastructure, construction, and manufacturing. From bridges to cars, you can't make steel without met coal, and there is no real substitute. In this video, I will break it down why AMR Alpha Metallurgical Resources is a moat protected business and how it's valued right now and why it might be one of the most overlooked opportunities out there. And here is financials of AMR Q2 2025. Before we move forward, whatever I'm going to say here, it's not a financial advice. It's only for educational purpose. So this is Q2 2025 results of operations. The coal revenue was 464 million, up 4% from Q1 due to slightly higher volumes and pricing, but down 28% from last year because coal prices have fallen. The tons sold, they have sold 3.88 million, 3% up compared to last quarter versus last year 15% down. The average realized price is $119.43 per ton, nearly flat compared to quarter, but 16% lower year on year. So what is average realized price? This is the average amount AMR actually gets paid per ton of coals sold. It's not just the headline market price you might hear about. It's after considering the type of coal, quality, contracts, and any adjustments. Example, if AMR sold 3 million tons, some at $150 per ton and some at $100 per ton, the average realized price could be around $120 per ton. In Q2 2025, AMR average realized price was $119.43 per ton, meaning every ton they sold on average brought in about 119 in revenue. And next is cost. $100 per ton, down sharply from $110 in the Q1 and 8.5% lower than a year ago. If we talk about the margins, 75.24 million total or $19.36 per ton, more than doubled if you compare to quarter, and thanks to the cost cuts, but still down 15% from last year, which was $148 million. When we talk about the cost, so the cost per ton, this is how much it cost AMR to produce and deliver 1 ton of coal, including things like worker wages, fuel, equipments, supplies, and other direct mining costs. Doesn't include overhead costs like office and salaries. In the Q2 2025, their cost per ton was $100 per ton, and meaning it cost them about $100 in mine and deliver each ton of coal. So what we can learn from this report: the short-term positive, management cost control is paying off even with the flat prices. They grew margins a lot compared to Q1, which is a good. That's what you want to see as an investor. Long-term caution, revenue and margins are still far below compared to last year because the prices and volume are weaker, a market factor can't control. Investor takeaway, if the coal prices rise, Alpha Metallurgical Resources' leaner cost structure means profit growth could be much faster than the market average. But if the prices drop further, margins will come under pressure. So next is the cash flow statement of AMR. So by the way, this is 6 months comparison. The cash from operations was 75.4 million in the first half of 2025 compared to 334.2 million in 2024. And the next is balance sheet. The cash and equivalents was 449 million, very strong cash position. Total liquidity 557 million, includes unused credit line. Debt only 5.8 million, essentially debt free. Current assets 988 million versus current liabilities of 247 million. So very strong. Equity 1.61 billion. Company is well capitalized. AMR balance sheet is very healthy. High cash, minimal debt, and strong equity. This means the company can handle market downturn, invest in growth, or restart buybacks without risking financial stability. And the next page is about their fiscal year 2025 guidance. The coal shipments is expected to 3.8 to 14.8 million tons for the year. The thermal coal shipments 0.8 to 1.2 million tons. Total shipments of 14.6 to 16 million tons. And the committed sales price. So Alpha Metallurgical Resources has announced that their met coal, the 69% already logged in with the price of $127.37 per ton. So the most of AMR coal for 2025 is already sold at fixed prices, giving stable revenue visibility for the rest of the year. If the market prices rise, there is a room for upside on the uncommitted volume. And if prices fall, these contracts protect them from big revenue drops. And after that, you must have heard about the one big beautiful bill that Trump has announced. I think it's about 1 month ago. So, according to that bill, from 2026 to 2029, AMR will get a 2.5% refundable tax credit on the cost of producing metallurgical coal. So this means they are going to get extra money and they are expecting 30 to 50 millions extra cash from this credit. So they can use that money to boost cash reserves, fund operations or mine upgrades, return money to shareholders through buybacks or dividends. It's like a 4-year government bonus for AMR, giving them millions of extra cash for producing the same coal they already sell. And the next page is about their share repurchase program. Few years back, the management has announced 1.5 billion approved to buy back shares from the market. So what happens? The number of shares will reduce in the market. So this is a way a company give value to their shareholders. So this reduces the number of shares in the market. Each remaining shares on a bigger slice of the company can boost earning per share and potentially the stock price. Shows management thinks the stock is undervalued. So they still got $400 million left to buy back shares. So last year they stopped buying back shares because they want to preserve their liquidity. But now they are planning again to buy buy back more shares. And here is the price chart of AMR. The current share price is $149.91. If you see in the chart, the price has dropped a lot. So if we see in the valuations, so valuations explain us how expensive and or how cheap this share is. So basically their earnings is not showing because they are in loss because of their sales dropped. But if you see their price to sales ratio, it's 0.71. So it means if they are making $1 revenue every year, to buy this company you are paying 71 cents, so which is very cheap. And you can also see the price to cash flow is 5.26, price to book ratio 1.05, and enterprise value to EBITDA ratio is 8.43. So if you compare AMR to any tech company, Nvidia, Apple, then this is the price that that's very cheap. You cannot really compare with anything. So it explains that how much people hate these kind of businesses. But as a investor, you always look for the companies that give you long time returns, and you buy it cheap and you sell it when the price goes up, or just keep it for the long time. So that's it for today. Hope you like this video. And please don't forget to subscribe my channel and leave some comments and let me know if is there any stock or any company you want to know. Thank you.